Hello, and welcome back to the Accounting Podcast, the number one podcast for accountants in the world, and your weekly news roundup and analysis in the accounting profession. I'm Blake Oliver.
I'm David Leary. Blake, again, you were traveling. You were at Digital CPA for 2 days or so, I saw on socials.
Nothing like Denver in December, David. I'm totally befuddled by the choice of that venue. But maybe I'm just weak now that I live in Phoenix. But yeah, it was great. Great to see everyone. We did a bowling event with AF Fund and Row and JustWorks. So we had about 100 folks from the conference there.
And it's really a much younger audience. I just see, or at least feels that way via social. It doesn't feel like the AICPA Engage event, if that makes sense.
No, it's much smaller, focused on technology, a lot of CAS practices, accounting, bookkeeping, outsourced accounting practices there. And they are growing rapidly. And I've got a stat for you about that this week. CAS practices are growing faster than basically any other segment of accounting, which is very exciting. And we also have news about the IRS Commissioner, Trump's nominee. We're going to dig into that, involved in ERTC claims after he was in Congress, Billy Long. We've got news about Square's move into accounting software, potentially, and follow up on that Macy's employee. But first, let's thank our sponsors. Who are our sponsors this week?
We got 4 sponsors. 2 of them are brand new, Blake. So we have Robo Debit, Relay, Cloud Accountant Staffing, and Tax Bandits. So we have 2 new sponsor ads. Stay tuned for those. I always like reading a new ad. Sometimes I stumble, but it's always exciting to read a new ad.
Thank you to our sponsors. Let's talk about the new IRS Commissioner, or nominee to be the new IRS Commissioner, Billy Long. Former Missouri Congressman Billy Long has been nominated, and it has generated significant attention and mixed reactions from various quarters. Billy Long is 69 and represented Missouri's 7th Congressional District from 2011 to 2023. He was a certified auctioneer and ran real estate businesses before entering Congress. Long does not have a college degree and has never worked in accounting.
He also, Blake, hosted like a radio show. So I heard him on a podcast, and that's how he says he had a base of an audience, and that's how he's able to run for Congress already. So,
okay.
So you have a chance here, Blake, to run for Congress.
To run for Congress someday? Yeah. No, thank you. No, thank you. Not in a million years.
And you might already be familiar with him. There was a viral video that was going around a year and a half or so ago. There's a protester in Congress, and this congressman just started going into auctioneer mode to drown out the protester, and that was him. He was just like,
I think I do remember that.
You know, the typical auctioneer talk.
Now, is that the video that you've brought today?
That is not the video I brought today. I brought one of the videos of him peddling ERTC and really claiming how accountants didn't stay on top of their game, right?
Let's give this a look.
We could play that first, yeah.
All right, here it is on the stage. Go ahead and press play.
Happens is we have far too many potential recipients of ERTC that walk away from it because they're getting bad information from their accountants, their CPAs, saying, oh, you won't qualify because of this or that, when in reality they probably would. And from the horse's mouth, that is actually the case.
That is exactly the case. And the thing is, a lot of CPAs looked at it for their clients back in 2020. And guess what? They didn't qualify because nobody did. But they didn't stay on top of their game and know that we went back in March of 21, made another tax law change with 8 amendments, and now virtually everyone qualifies. We don't turn down more than we take, but the cases we look at, if they don't qualify, we do not tell them they do, and we do not try and get them through the process. And if you do qualify, we'll give you a good faith estimate of how much you'll be receiving.
And I've got another video that I'd like to play for you here as well, David. This is Congressman Billy Long. The name on the video is Mark Speaky, but that's just because he was on that guy's computer when they were on Zoom. And this is Billy Long talking about the employee retention tax credit.
Congress does 2 things really well. Absolutely nothing. They're overreacting. And they laugh usually at both lines. And I said, that's exactly, go get my hat, Mark. Can you? It's on my desk right there. Bring me a hat. And I point to my hat and I said, that's exactly what ERTC was in 2020 under Donald Trump. And I'm the one that originated the phrase Trump train. So anytime you hear a Trump train, it came out of this pea brain up here. But I say that's what ERTC was in 2020. We did it, but you had to have 3 freckles on the left side of your face, 2 on your right. You had to have under 100 when you had to prove COVID adversely affected your business. Nobody qualified. So we were doing absolutely nothing. We go back in March, and this is where a lot of the CPAs miss out on it. Thank you. We go in March of 21, we come in, and with 8 amendments, we changed the tax law again, and we overreacted. So now everybody qualifies. I mean, from nonprofits to my church has done it, Presbyterian Church here in town, Economic Development in Joplin, we got them $3.6 million. That's a not-for-profit. A funeral home here in town. You think funeral homes didn't have a lot of business during COVID? I mean, people that have had the best 2 years of their life ever on income qualify. And a lot of these CPAs are missing out on that because number one, they didn't know about it, so they're embarrassed. They badmouth it. Number 2, maybe they did look at it in 2020 when nobody qualified, but they didn't stay on top of their game and follow up in March of 21 and realize that, hey, they did qualify now. And so, it's a constant.
So there's Billy Long talking about how even if you had the best 2 years as a funeral home during COVID, you could qualify for the ERTC, promoting it. He started doing this immediately after he left Congress in 2023.
And he's tied to companies, right, that are, you could label as ERC mills, but it's not super clear. But at the same time, some of the warning signs that the IRS published about, some of their websites match this, but there's 4 companies he's tied to. One is called Commerce Terrace Consulting. Another one that he was on that podcast about was Lifetime Advisors, who, which interestingly enough, stopped doing ERTC applications. And that in the last 3 days vanished from their website. They had like a banner, we're not doing them anymore, and it's not there today. I don't know what happened. I should have screenshotted it. And then that's tied to a company called Profit Max, which is in alliance with Lifetime Navigators, which is tied to Lifetime Advisors. And it seems to be somebody's firm, her name is Stacy Doge, not the Dogecoin, but Doege. And she's listed as an agent on the Lifetime Advisors website. So there's a lot of this like crisscrossy, multiple websites. I did look on the Better Business Bureau and I did find one complaint. Somebody got the loan, they found out maybe they didn't qualify. They returned it in that forgiveness window. Remember, you could just give the money back. Mm-hmm. But the complaint with the BBB, Better Business Bureau, is that Lifetime Advisors would not give them the fee back, which is questionable. Now, there wasn't hundreds of complaints, but there was one complaint on that.
Right. So these are not accounting firms. These are these consulting firms, these quote unquote ERC mills that popped up just to process these ERC claims. And Long boasted in a podcast interview that his clients obtained tax refunds exceeding $1 million through the ERTC program. He actually talked about how in Congress he worked to help make the ERTC easier for businesses to claim, specifically removing the requirement to prove a business downturn due to COVID-19. He encouraged potential clients to disregard their accountant's advice when it contradicted their eligibility for the credit. So, this does not make me feel good about this potential IRS commissioner. He has no experience in tax or accounting, except in terms of promoting a potentially fraudulent tax credit.
Exactly. He never participated in the House and Ways and Means Committee. He has no. But he did lobby when they were starting to think about shutting down ERTC. He lobbied for them not to shut it down. But outside of that, he hasn't really been involved in the tax game.
So let's summarize for our listeners who may have missed it, the issues with the employee retention tax credit. The IRS so far has identified over 22,000 improper claims amounting to $572 million in assessments, $500 million. They've initiated 450 related criminal cases. And FinCEN has also initiated 223 investigations involving more than 2.8 billion of potentially fraudulent ERC claims across the years 2020 to 2023. And many businesses filed improper or fraudulent claims for the ERC, often misled by aggressive marketing tactics. And I think you could say that Billy Long's marketing tactics promotion were fairly aggressive, saying to ignore your accountant's advice and saying that anyone could qualify for it. So the short story is that this program has cost taxpayers billions of dollars, probably. And, this is the IRS commissioner.
In fairness, I don't know if it's fairness, but I did listen to the entire interview. The second half, he really talks about his experience in Washington because he's a little bit of an outsider, and he's actually kind of a funny guy. So it's worth listening to the interview and how he views Washington, D.C. and how he interacts. And he discovered he can take anybody to the Smithsonian. So if you can't get tickets to the Smithsonian, he'll get you in, Blake, that type of thing. It's worth, as accountants, because we're closely tied to what happens at the IRS, the more you know about him, probably the better. But we'll see where this goes. It's where I think he's entertaining, but I'm not sure I want him running the IRS. It's kind of that bucket.
I'm not sure I want an ERC promoter running the IRS when the ERC cost is estimated to now be over $550 billion. And it's money that went to a lot of businesses that did not need it. And what he was talking about was exactly those businesses. The funeral home during COVID getting an ERC check. It's just wrong. But and this is what really bothers me about the current situation with Trump's nominees. The promise has always been from Trump, drain the swamp, drain the swamp. And I love that message. That's a great message. But this is not draining the swamp. This is putting a guy who is knee deep in the swamp in charge of the Internal Revenue Service. And that gives me heartburn. Shall we move on?
Yeah.
Or shall we thank our first sponsor?
Yeah, we'll do that. But the only thing they're not, these companies that are doing this, they're also involved in lawsuit, class action stuff. You know how for small businesses, the merchant service lawsuit against MasterCard and Visa, that's out there because people got overcharged for merchant fees. Apparently, they'll represent you to get even more money out of that. It's just questionable at best. And you're right. You don't want a person leading the IRS to be a questionable guy.
No, and I'd at least like them to have some experience in tax preparation or accounting, or be a CPA, perhaps. Even maybe an enrolled agent should run the IRS. Maybe somebody who used to work there. I don't know. Yeah. Let's thank our first sponsor.
This sponsor is Robo Debit. As an accountant, you know the drill. Constantly looking up account balances, then computing and posting those routine journal entries for loan interest, COGS estimates, commissions, or salary reclasses. Wouldn't it be nice if this just happened automatically? Well, now it can with Robo Debit. This brilliant new app automates the posting of daily, weekly, monthly journal entries, all based on an account balance that you choose. No more waiting until month end. Your financials will stay updated throughout the month. It's so simple, it's genius. Imagine automatically accruing loan interest, pulling 5% commissions from monthly sales, or reclassifying 25% of wages to COGS exactly when you want. Every day, every week, every month, right on schedule. If you know your sales data is ready at 5 p.m., set the entry to post at 5:30 p.m. Done. Robo Debit launches its beta on January 1st, and you could be among the first to try it. As one of their Robo groupies, you'll get early access discounts for the first 4 months of your subscription, have a say in future enhancements, and even snag some cool Robo Debit merch. If you're ready to let your journal entries post themselves, sign up as a beta user and become a Robo groupie, head over to accountingpodcast.promo/RoboDebit. That is accountingpodcast.promo/RoboDebit.
Thank you, Robo Debit. David, let's talk about Macy's. We've got some follow-up on that. And it looks like we now know the motive for why this employee misstated Macy's financials with these improper accruals.
And you were right, I think. You suspected that it was incompetence or a mistake, and they're trying to cover up a mistake that was made. And that, according to an article on CNBC, is the reason. Now,
so what's the source for that?
Well, this is the problem of most media these days.
An anonymous source?
According to
Person
sources
familiar with the matters?
familiar with the investigation, but not authorized to share details from the probe.
But somebody at Macy's.
Probably, I'm assuming that's,
Okay.
we're guessing.
so it's
that.
just somebody familiar with the investigation. We don't know where they are. Okay,
Exactly.
got it. But they're saying that, what are they saying?
Here's what they're saying. The employee told investigators that a mistake was initially made in accounting for small parcel delivery expenses. Then the person made intentional errors to hide the mistake, according to sources familiar with the investigation. So it was you're like an incompetence. But then I'm thinking, like, what kind of work environment is that where you can't just make a mistake and go to a boss and be like, hey, I screwed this up. Let's fix it. It kind of makes you wonder.
Right. Well, and then as we talked about in that episode, the lack of internal controls to detect and correct this error before it ballooned into $151 million. And that is now the number that we're being given. Macy's put out its quarterly numbers, I think it was yesterday, December 11th, and said that this employee had hid $151 million in delivery expenses over about 3 years. And they lowered their adjusted earnings per share guidance. And they also reduced gross margin projections due to these misstatements. The stock dropped almost 11%, wiping out about $380 million in market value. And something interesting that the CEO said, quote, not quote yet, Tony Spring explicitly stated that the investigation, quote, concluded that there was no material impact or restatements, unquote, required for Macy's previously filed financial statements. No material impact or restatements. He said that I believe that was on the earnings call. And I'm thinking to myself, well, $151 million is material. Like I think that's material, and clearly the markets think that's material. So I'm wondering, like, what is the basis for saying that this is not material and that there are no restatements required? They are restating their consolidated historical financial statements. Now, it was spread out over 3 years, $151 million spread out over 3 years. And yes, they had $4.36 billion in delivery expenses. So the error represented about 3.5% of the total delivery expenses. And you could make an argument that 3.5% is not material when it comes to just that particular account. But as we discussed last week or the week before, $151 million is more than Macy's net profit last year.
Yeah.
And I think that's quite material. So I don't understand how he can make this statement that it's not material when they're revising their financial statements. Now, I went in, did a little research on this, and I guess there are two kinds of restatements. There's the big R restatements, and then there's the little r restatements. So the little r restatements are corrections to financial statements that are considered immaterial to prior periods. And I guess that is what management has decided they're going to do for this. And the big R restatements require more extensive disclosures and an 8K filing, and they're not going to do that. But I mean, I think you're kind of splitting hairs on this one, to say it's not material.
And I think the street's punishing them anyways because they're just not happy with their overall sales. Anyway,
Yeah, well, Macy's strategy, is basically the same as it's been in previous years, which is let's just close stores and get rid of the less profitable stores to increase profits. But is that really a long-term strategy for growth when people are buying stuff online now and not going into stores? Like, the stores that you keep are going to continue to decline in profitability. So unless you change your strategy, you're just going to keep closing stores every year until you don't have a company left.
Yeah, or you just have one novelty store left that it's a destination site and that's it.
Just the one in New York, like the original, right? It'll just become a Disneyland historical museum of department stores. Well, the problem too is, like, a lot of brands that used to be in Macy's are now building direct relationships with customers online. And it's so easy to buy and return stuff on Amazon now. Like, why would anyone do anything else? I bought a pair of earplugs online. I bought it direct from the company. I could have bought it on Amazon, but I thought I'm gonna do this company a solid. I'm gonna buy it direct from them. But like there's something wrong with them, so I have to return them. I've been trying to return this item for like a week, and I cannot get an RMA from their customer service people. Like they're
Return
it's broken.
your voice.
Yeah. Hey, welcome to all of our live stream viewers. Great to have you with us. Can't Pay Attention asks, what is the starting wage of an accounting graduate in Los Angeles? That's a great question for Perplexity. And while David is queuing up his next story or laying it out, maybe I'll get you the answer to that. Can't Pay Attention. And the follow-up is an accounting degree worth getting with advancements in AI? Oh, I can answer that question for you. Can't Pay Attention. Yes, it is. There are just not enough accountants, and it's going to drive up salaries for accountants who do use AI. Same thing I experienced when cloud computing became a big thing 20 years ago. If you embrace it, use it to enhance your productivity, there's all these accountants now who are like going off on their own. And David, you've talked about this over and over again, how easy it is to start your own firm. All you need is a laptop and an internet connection, and you can be in business. That's where I would be, like being a virtual bookkeeper, accountant, controller, or CFO, whatever your ability level is for small businesses all around the country. And you can go live anywhere. So you can charge a decent rate, but it's still competitive. And you can have a super high quality of life. Just like the two people I have recently interviewed on my Earmark podcast. That's the Earmark podcast. Go to podcast.earmarkcpe.com or just find Earmark podcast in the Earmark app. And you can hear from two accountants who have done exactly this. Erica Goody, who lives in Idaho, and Yuri Kapilovich, who lives in New Jersey. They both are solo practitioners making over $200,000 a year, and they are working far fewer than 40 hours a week. In most of the year, they each work less than 20 hours a week, and they pull in over $200,000 a year each. So that sounds pretty good to me. I don't need millions of dollars in salary, living in a super high cost of living area, working 60 hours a week to be happy. I'd much rather have all that time to do fun stuff. And
It's freedom.
you go live in a lower cost area, you're good. So check out those episodes on the Earmark podcast.
You ready for this
Drew.
story?
Welcome, Drew. Almost. I'm just finishing up
more
welcoming
comments.
our
Got it.
viewers. Sean Smith says AI is only as good as the person using it. It's a great tool, but you better know what you are after with it. That's true. To effectively use these AI tools, you have to know how to ask the right questions. And unfortunately, that is not what accounting education is teaching people how to do. Historically, it's just taught people to follow the rules. But you need to now know how to ask good questions. It actually makes it really easy to be an advisor. All this talk about moving to advisory in a firm, it's so much easier because you can learn anything almost instantly with AI now. But you have to know how to ask the right questions. You have to know how to educate yourself and not just be taught rules. Erica, in response to the IRS Commissioner, says, I think by putting these people in these positions, it makes it easier for Trump to fire them. It shows that they are trying to find the deep state people and the ones that follow them. So that's like the three-dimensional chess argument here. I mean, yeah, I don't know. I don't know why, like, it doesn't make any sense to me. Like, and I just want to say, like, I don't have any strong opinions about like Trump versus Biden. Like, they're both politicians, in my opinion, and they both do politician things. And we saw that, of course, with the Hunter Biden pardon. Like, for all these promises that Biden was not going to do this, he went and did it anyway. And I felt like he was going to do it the whole time. So, like, I'm not partisan in this regard, but I also don't understand why Trump is nominating people who really like don't seem qualified for the jobs. Like, that just seems like, why create extra friction when you're trying to get shit done? Let's see. Arjul, welcome, Arjul. Arjul says, hey, Blake and David, tuning in from sunny LA. Shout out to DCPA. Had an amazing time attending it for the first time. I met progressive firm owners openly sharing tips. That's awesome. It was great to see you, Arjul. Welcome to the show. Nightlight says, great job, guys. Hopefully we don't put you to sleep. Nightlight. And Arjul says, in regard to the Macy's discussion, I wonder if it's a material I wonder if it's material from a tax provision standpoint. Restating the financials means they have to amend the tax returns and adjust their deferred assets. Yeah, me too. Like, I feel like saying that it wasn't material was like a big overstep on the part of Macy's CEO. The dollar amount, the need for financial statement revisions, the impact on earnings guidance, the market reaction, like that all seems very material to me.
Yeah.
And is it really his job to decide what's material? Isn't that what the auditors are supposed to do?
Yeah, it keeps getting downplayed, and that's the suspicious thing about this whole thing. It keeps getting downplayed. Yeah, it's immaterial. It doesn't matter. It was one employee. That's the part that's really fishy about this whole thread as this has gone on, is Macy's keeps downplaying it, which tells me maybe there's something bigger happening and they want to distract everybody, but we'll never know.
Raj in the live stream in the chat says, do you have any tips for getting those 30 credits for cheap? This is regarding the 150-hour rule to get your CPA. I'm seeing a lot of masters of accountants for non-accounting majors, but they are asking all of my wealth, LOL. Yeah, they like to charge a lot of money. Those masters of accounting programs make a lot of money for those colleges and universities. And, somebody's got to pay for the high salaries of all those administrators who don't actually add any value. But, and those poor educators who, like the professors, the adjunct professors who don't get paid anything, like I feel bad for them, but that's beside the point. Tips for getting those 30 credit hours. I did community college. I did Santa Monica College online. And then I did UCLA Extension, which is you can just pay per credit. It's fairly reasonable compared to a master's. I think I spent about $10,000 to get my extra hours that I needed. And it was about 30 credit hours. But there are ways to do it even cheaper. What was the university online one that
Western Governors.
Western Governors University has an all-you-can-eat program where you can sign up for a semester and just test out of as many classes as possible. So depending on.
I just pasted in the links a link to a YouTube video where we interviewed someone who was able to get a CPA in 3 months. So watch that interview.
The interview that we did. That was amazing. He got his credits to sit for the CPA exam in like 3 months using Western Governors University. But, it really depends. If you're going to do that, I wouldn't do that if you actually need to learn the material. If you already know everything you need to know and you're just getting the credits because it's this red tape, then yeah, blast through it, right? Speed run it. But if you really want to learn, I really, really liked Santa Monica College. I thought that the online education there was spectacular. And I really learned my debits and credits thanks to that. So I check it out. Okay, what is our next big story, David?
So I've had this story in my bucket for a couple of weeks now. Intuit launched Intuit Assist for all US QBO users. And frankly, I have not been very impressed. But yesterday I was impressed. Blake, I was very impressed.
So back up for a sec. What is Intuit Assist?
Intuit Assist, if we go back to the year-long journey, first it was just this overly hyped press conference Intuit did. Look at this new Intuit Assist, all the AI stuff we're going to do, probably pumped up the stock price a little bit. But then they slowly started rolling it out. And first it felt like just a marketing gimmick. They rebranded all the features of QuickBooks that you could argue are partially AI, and they changed it to use the little Intuit Assist logo. So the bank feeds all of a sudden now has the Intuit Assist logo, the scan bill. They started dropping this all over the UI of QuickBooks. And Intuit Assist is actually a bigger AI initiative for all Intuit products, but they've rolled it out now into the QBO. And you get things like a business feed where it feels like you're just regurgitating information from other places to QuickBooks. I try to use it we had some overdue invoices, and it wrote stern letters. We still didn't get paid, so I don't know how good it worked, but I used it to create some stern collection letters, right? And my background, right, I work with helplaunchbill.com, AutoEntry, HubDoc, Dext really early on. So I've been very involved in like scanning of bills. I'm aware of how bills get scanned, how hard it is. And QuickBooks bill scan, frankly, has not been good at all. And every week, I get a bill from our editor, Zach, who we've referenced before on the show. And it never really works. I just have to go in and change the category to contract labor. And then I'm lazy. So I just, in the item and description field, I just type in editing, recording, meetings, admin and move on with
You
my
don't
life.
put in all the detail from the
I don't
line
put all the
items.
details. And he gives us a kind of a complicated doc. It is probably a Word doc on page 1, which is the invoice. And that's portrait. And then there's 2 pages that are landscape from an Excel table with all the details he does for us. So I just dump it in, but I always have to fix it. Well, yesterday I uploaded it in the PDF and I didn't have to change anything. Intuit Assist scanned the bill. Not only, Blake, did it scan it perfectly, it actually made it better than what I would have put in. So in the description field, it puts a sentence in. Invoicing for editing, recording, meetings, and admin services provided by Zach to earmark for the period 11/25 to 12/1/2024. I was lazy. I would only put those 4 words in. So have we now tipped with AI where it's going to do things better than when we did it ourselves? And
Yeah.
I was very, very impressed. Enough to talk about this on the show. It's really impressive what they've done.
Well, what's impressive is that there are entire categories of tools that plug into QBO to do this. And AI, it sounds like, has just made those obsolete. So tools that we all used, like HubDoc and Auto Entry and Dext, and name me some other OCR scanning and data entry tools. AI can do this, and it can do this without necessarily being coded to do it. It's just trained on data sets. You give it a bunch of invoices and bills and show it examples of how to code them, and it can follow the examples just like a human. But it does it perfectly, almost perfectly. Well, I guess it doesn't even have to do it perfectly. It just has to do it better than you would have, right, David?
And I'll
That's
keep
the
an eye.
point.
Was this a one-off? Will happen next week? But I'm impressed.
When am I going to see this in Zero? My biggest complaint right now as a Zero user is that I can't forward bills and have them automatically entered into Zero, at least as far as I know. I have to use HubDoc. And so I have to like have a workflow where I go into HubDoc and I process the bills, and HubDoc hasn't changed in years. So it's like not quick. I just want to be able to forward the bills into Zero and have it handled. And the receipts, whatever it is, right? Like, why can't that all happen in the accounting system? It really should. If anyone knows that's listening, let me know. Maybe I'm just not up on it.
And I only have, it's very low volume for me. But imagine if I had, 1,000 bills a month coming through. This is significant time savings. If it's at the point where the bills are rich and correct, that's amazing.
Yep. Rafi asks, can AI currently complete a tax return, 1040, without any human assistance? That would be interesting to try. I think it can, but it depends on the complexity. If you have a simple W-2 and you just need to complete a tax return, I bet you that I could do that with ChatGPT.
I agree. If it's like high school kid working at Burger King, take their W-2, I fully agree.
That's why TurboTax and H&R Block and the other simple tax return prep franchises are doomed, because that's the bulk of their business. And that's why they're all trying to go to businesses, small businesses, stuff that can't easily be automated with AI. But yeah, I think that the preparation of a 1040, a simple 1040 for 80% of people in this country is going to be automated by AI within the next few years. It's just a matter of doing it at scale and integrating it with all the tools that you need to actually file the return. So it doesn't help if I fill out a PDF with ChatGPT. I need to actually transmit it to the IRS. I need to make the payment. There's all this stuff that has to happen, and I need to verify it. So it's just going to take time for that to happen. But yeah, the simple stuff, the putting numbers into boxes on a form, I don't see why AI couldn't do that if it can't do it already. There's already a tool called Tax GPT that claims to be able to do this. We haven't tried it, but maybe we should do that this year, David. Maybe we should try some of this AI stuff and see if we can get it to do our tax return.
Business returns.
Yeah.
It's just the constant eat the dog food. That's what we do for everybody else. Let's jump into our second ad, and then you could get another story ready here.
Let's do it.
So our next sponsor is Relay. So between Blake and myself, we have 3, 4, 5 business entities, maybe 20 or so checking accounts and dozens of virtual cards. It would be impossible to manage all of this if we weren't use Relay as our small business bank. Relay is truly a part of the tech stack we use to run our business. Relay allows Blake and I to each have our own logins. We can grant access to our team and even our accountant without sharing passwords or two-factor authentication codes. Relay allows us to grow and scale our banking needs without ever going into a physical branch. I recently added an account to receive inbound merchant services with just a few clicks and had to create a payroll checking account. Again, a few clicks, and I instantly had access to my ACH numbers to pass them over to my payroll provider. With Relay's virtual cards, we can issue debit cards to our team around the world for needed business expenses. I can instantly spin up new Visa debit card and set both daily and monthly spending limits. And when a team member doesn't need the card anymore, I just freeze it until they need to use it again. Relay also has automation features to sweep money automatically from one account to another based on dates, amount, target balances, or percentages. For example, inbound payments could be split daily to your payroll, sales tax, payroll, operating, and savings accounts based on predefined rules. To learn more about using Relay for your firm and clients, head over to accountingpodcast.promo/relay. That is accountingpodcast.promo/RELAY.
So I've got some follow-up on Supermicro. We previously reported on the show that Hindenburg Research published a report alleging accounting manipulation at Supermicro, which makes high performance and high efficiency computer servers and software and storage systems for various markets. So equipment and software for enterprise data centers. So back in August, Hindenburg released a report alleging that there was fresh evidence of accounting manipulation at Supermicro, which years ago was also charged by the SEC with prematurely recognizing revenue, understating expenses, and they paid a $17.5 million penalty. That was back in 2020. So Supermicro is no stranger to accounting manipulation. So Hindenburg Research published this, the short seller published this report in August. The day after, Supermicro announced a delay in filing its annual report. The company stock dropped 19%. The Justice Department in September launched an investigation into Supermicro. Ernst & Young resigned as Supermicro's public accounting firm in October, which is pretty unusual, and the company's stock dropped 33% after that. And then BDO became Supermicro's new independent auditor in November. And Supermicro has now announced that there was a review by an independent special committee, which concluded that there was no evidence of fraud or misconduct involving management or the board. And they're firing the current CFO, David Wiegand. So this is one of those stories that doesn't add up to me, David. Why would EY resign as the auditor of Supermicro? Why would Hindenburg Research publish a short seller report? And then why would an independent, a quote, independent review board run by Supermicro itself find no evidence of fraud or misconduct involving management or the board? Something is not, and why would they fire the CFO? Something is not adding up.
And the stock is all over the board. So they were going to get delisted from NASDAQ. And that's when they came out with their plan to file their 10K disclosures properly. And that's when they hired BDO as their new auditor. And then they avoided getting delisted. And then the stock shoots up 27%. Then the stock's down. Then it's back up again. I think last week it went up another 18% in pre-market shading because of their internal investigation. I think that's the next step on this is if there's not accounting fraud, is there a stock price manipulation happening here with the news? Constant.
I know, right?
Huge
up
swings.
And down and up and down. Now, I don't know. Should we be confident in BDO being the new auditor and rooting out any possible fraud or misconduct? Because let's remember, BDO's PCAOB deficiency rate in 2023 was 86%. 86% of the audits that the PCAOB inspected of BDO were deficient, and so deficient that the auditor should not have issued its opinion. It's crazy to me that this is just happening out in public, and yet the stock price continues to, like, where is Supermicro right now? So in the past year, it's up 43%. But I guess that's because all this drama started, since the drama started in August, the stock price has gone down from 62, 63 It went down to 18, and now it's back up with this announcement. The company announces that their own investigation cleared them, and now the stock is up to $38. It's just wild.
And
You know?
what's interesting about them, at the end of the day, I think they actually have a real product. I guess their chips, their servers that are for AI, people are buying them. Like, they have a real business here. They probably didn't need to manipulate numbers at the end, but they did. It's never enough, right? It's never enough money for people. You always have to get more. You got to milk that cow.
I guess so. All right. What is next, David? I have a story about private equity. Did we talk about Square?
We did not talk about Square.
What about Square? You have for years posited a theory on this show that Square will one day create their own accounting general ledger to compete with QuickBooks.
I've always said they're the number one threat. It's not Xero. It's companies like Square, Shopify, probably Amazon. It's anybody who has a lot of businesses and they're getting to them before Intuit does. And to set the table for that, if you think about the olden days of QuickBooks Desktop, you would on day one start a business, day two go get an accountant. On day three, the accountant said, go to Office Depot and buy QuickBooks. So very early in a business's life cycle, the accountant is involved and QuickBooks is involved. But now you can sit at your kitchen table, spin up 5 e-commerce stores, get a little Square dongle, run a business for months without ever talking to an accountant or getting an accounting software GL package, right? And so I've always thought that this is a threat to Intuit. And this is probably why they bought MailChimp ultimately. And also there was news yesterday, if you saw, Intuit's now getting in bed with Amazon. I think previously Intuit kind of has a no-compete agreement with Shopify going on now. I think Intuit recognizes this threat. And we actually covered it on episode, I think, 219. So we're going back almost 5 years. Internally, Square released a blog post that covered their internal GL that they used, right? And it was in a blog post. It was more of an engineering brag of a blog post. But it's like, oh, they're already doing GL stuff. They have the ability to do it. So what happened now, years have passed, but Andy Schwartz, this is his LinkedIn will be in our show notes. He started years ago a restaurant-focused AP and cost analysis app that was acquired by Toast. He went on to start a new company called Profit Labs, which is some sort of AI accounting play for restaurants. Unfortunately, it's already been shut down. There's no website up for that anymore. So I don't really know what that was. But this week he posted on LinkedIn that he's now at Square. And his title is Head of Product Accounting Solutions. And he has a description. I am running a new product and business area for Square around accounting and financial management solutions for our sellers. Accounting, and more broadly, how sellers manage the profits, costs, and complexities of running a business will be an area we hope to add more value to them in the future. And he also put a post about him that he's now part of Square. And this will be a new chapter for me, as I will be leading a brand new accounting product area within Square across all verticals. As part of this, the learnings and efforts from last year at Profit Lab. So what he learned even more about accounting last year with his other startup, he's going to apply that to build whatever accounting product Square is going to build. But this makes sense. It's the only thing they don't have at Square. They have payroll, they have merchant service, marketing tools, like the whole stack is there.
Right.
So this is probably going to happen.
And this is a problem for Intuit because Sasan Goodarzi's goal is for Intuit to become the full suite of products that you need to run a small business on. He has that same vision for what Square already is to a lot of businesses, which is, you sign up for QuickBooks to do your accounting and invoicing and get paid and pay bills. You sign up for MailChimp, which they own, in order to do your email marketing. And what are some of the other products in that suite? I forget.
Yeah, MailChimp has calendar stuff, so people can book appointments. You can charge for the appointments. E-commerce stores. It's a lot of similar stuff. And Intuit also has merchant service and the dongle and all of that. So it's very similar offerings.
Right. But Square has the advantage because that's what people sign up for when they have any in-person sales. And that's the first thing that they sign up for. So if Square can expand to being the invoicing app too, the one that people sign up for in order to send their first invoice as like a service provider online.
Well, they already do that. They've been
but
doing
it's not
invoicing.
it's not as full featured. Well, maybe it is. I haven't seen it in a while. I tried it, but like Square has always been historically for brick and mortar because of the dongle. That's where they started, right? But if they could expand into offering everything that you need to run a virtual business as well, which it seems like they're doing, right? E-commerce is bigger and bigger. They understand that. And if you could do hybrid, if you can do both the in-person transactions and the online transactions, I think Square has a huge advantage, and they could grab a huge chunk of the current QuickBooks market. And maybe that's why Intuit has been moving up market, because they see it happening.
Yeah.
But
And-
I just want to give you credit, David, for seeing this coming years ago. Somebody should have you advising their, freaking VC fund.
I remember when, I don't know, I was 38 and they were asking what's the biggest issue for accountants when I was on the 40 under 40 list. And I brought this up because I have a chart that I showed on some talk I did. And the chart actually was from Toast, and they were showing all the apps in the restaurant ecosystem. And you know what wasn't on it? QuickBooks or Xero. There was like 100 apps in the restaurant ecosystem and the accounting. Like, it's such an afterthought for many, many industries. And then Clio, law firm software, they launched their own GL. Shopify now has shopify.com/finance, which, if you think about it, has financial dashboards to manage your whole thing, a bank account, sales tax, credit cards, loans, bill pay, sales tax reports. Sounds like an accounting system to me.
Yeah.
And now Intuit just got in bed with Amazon yesterday or the day before. Well, all the Amazon sellers, there's millions of them, these third-party sellers, as part of their Amazon account, are now going to have QuickBooks. Now, it's not clear if it's for free or not, but you're going to get QBO built right into the Amazon seller's dashboard here mid-2025, and that's probably to keep Amazon from just building a little GL product and offering these types of services.
Yeah. The barrier to entry for GL is going to decrease dramatically. I think the reason most companies have failed to do it is because building a general ledger accounting system sounds easy at first. If you don't understand the concept of debits and credits, and you just view it as like a single entry system, which is what most non-accountants think of when they think of accounting, sure, it's easy. But as soon as you have to build a system that can automatically balance the debits and the credits, and that can maintain all these multi-ledgers and sub-ledgers, and accounting is a very simple thing that gets very complicated very quickly. It's like chess, right? The rules are not that complicated, but there's an infinite number of possibilities. And so it's been really hard to build a general ledger.
Ask FreshBooks. Even if you build it, it's even hard to get adoption. It's very
exactly. And that's also because even if you build all the debits and credits, you have to build the controls in the system that prevent people from mucking up the books and keeping those debits and credits balanced. And then all the different types of transactions that you have to enter and all the different data fields. Doing that with humans is really time consuming to build and takes a long, long, long time. It's like trying to build tax software from scratch. But what is going to change that? AI agents, because you can give the rules for a general ledger, you can give the rules of accounting to an AI, and you could possibly even have it give it access to an existing general ledger program, and you could have it reverse engineer a GL for you, because there's nothing proprietary about GLs. It's just accounting theory in software. So somebody could take an AI agent and have it click around inside of QuickBooks, or have it watch videos of people using QuickBooks, and it could learn how QuickBooks works, and you could build another QuickBooks, where that would have been really, really difficult to do. It took Xero years to build a GL that was competitive, like 10 years, I want to say, maybe longer.
And that was their primary focus. And that's the thing that's going to make this kind of hard. He's the one person on the accounting team at Square, right? It's not a priority for Square in the grand scheme of all the things Square's doing. The accounting GL is probably low priority, and it probably will never get funded and always kind of be half-assed. That's the advantage Xero and QuickBooks have, is it's not the primary focus the way it is at QuickBooks and Xero.
Yeah. We have a question in the chat from Shannon. Shannon says, curious on your views for financial close automation softwares, Blackline, Trintech, Flowcast. Do you think accounting teams will start moving away from Excel more with increased AI? I have thoughts on this. I used to work at Flowcast, by the way. I was the first product marketer at Flowcast, the CPA on the marketing team. That's how I got into all this doing webinars and stuff. And the reason that I liked Flowcast, the reason that I left public accounting to join is because I thought Flowcast had the best approach to building software for accountants, which was not to try to replace Excel, but to augment it, to layer on top of it and to connect it in a way that it isn't connected. And what that meant was you just put a little hashtag code in a cell in your workbook, and that was the cue for Flowcast to sync with whatever was to the left of that code. So you would do your work paper for your prepaid, let's say you're at Macy's and you're doing your, prepaid small package delivery expense account reconciliation. You would put the little hashtag code for the GL account number in your workbook. You would upload it to your file storage system, like Box, for instance, and Flowcast would simply be watching all the work papers and would sync that final balance with your trial balance and create the trial balance reconciliation. I forget exactly what that report is called, right? It's where you have your trial balance from the accounting system, and then you have, here's the amount in all the work papers, and you want to make sure they match. And if they don't match, then you got to go fix your work paper, right? It's just tie out, your tie out sheet.
Chicken ties, yeah.
Yeah. And so it automated that, but with a very simple solution. We didn't have to rebuild spreadsheets. We just linked the existing spreadsheets into the trial balance reconciliation software, into the financial close checklist. And that's the best of both worlds, right? Because you get the ultimate flexibility of spreadsheet software that's been around for 20, 30 years, and you don't have to rebuild it. So I don't think that we'll be moving away from Excel, because the best solutions are the ones that integrate with spreadsheets, because they are super flexible. And that takes a long time to build. But I guess if I just look at my argument I just made, maybe AI will make it easier to build the spreadsheet tools. But the issue then is always like the portability of your information, the ability to get it out of the system. You have to be able to export to Excel anyway in order for me to save my data and to back up my stuff from your system. So why not just integrate with it in the first place? There's no point in trying to replace it. But I do think that like AI will do the work papers in Excel. So not just doing the tie out, but actually helping to complete the work paper or review the work paper. That's also a really great use. Like in the case of Macy's, I'm going to guess that nobody was reviewing the work papers. Maybe there was not even a work paper, but it's possible there was a work paper, just that nobody was actually looking at it to make sure that it tied out to the GL. So like close management software like Flowcast should have caught this. Now it's possible the person was just putting in the number in the work paper and that there actually wasn't anything in there that backed it up, but you could use AI to totally catch that, because you could have AI look at the work paper and spot any inconsistencies in formulas, in calculations, in overrides, that sort of thing. Like this is totally doable today. If I take a workbook and I pop it into ChatGPT 4.0 and I ask it to review that workbook for problems, it would find that. So
We should probably hit our next two ads and then any other small follow-up stories. It's almost top of the hour here.
Let's
do you want to do the third ad?
3 and 4. Yeah, if you could pop that script into the chat, I will gladly read our ad for Cloud Accountant Staffing. Thank you, Cloud Accountant Staffing. In case you missed the last 100 or so episodes, David and I have been discussing almost weekly that there is an accountant labor shortage. Regardless of the root cause, the problem is real. My social media feed is full of firms attempting to fill open positions on their teams. But how can anyone increase their staff size if everyone is attempting to hire during a labor shortage? That is where Cloud Accountant Staffing comes in. They will help you hire full-time team members for your firm that reside in the Philippines. How much would your firm change, or for that matter, your life change, if you could add 40, 80, 120 hours of capacity to your firm in 2025? Cloud Accountant Staffing was founded by a firm owner who grew his firm using offshore talent, and now he is applying everything he learned to help you grow your firm. If your firm is in need of expert bookkeepers, accountants, CPAs, or virtual assistants, head over to accountingpodcast.promo/CAS. That's accountingpodcast.promo/CAS.
And our last sponsor today is Tax Bandits. If you're feeling the pressure juggling 1099s, W-2s, and ACA 1095 forms, listen up. Tax Bandits is the solution you've been waiting for. They've got over a decade of experience and support 100-plus tax forms, including everything from your 940X series to those tricky state filings. Tax Bandits handles both federal and state e-filings seamlessly, so you're all set no matter how many states your clients operate in. Tax Bandits is IRS certified, meaning they offer instant processing of your forms and provide real-time status updates, ensuring accuracy and eliminating the risk of B notices. For additional peace of mind, Tax Bandits also offers TIN matching and USPS validations to ensure your filings are precise and your IRS requirements are met. Plus, delivering recipient copies is a breeze. Go with traditional postal mail or give clients online access to their forms. It's all about flexibility. You'll love Tax Bandit's intuitive platform, especially if you're managing a team or a large client list. You can assign staff roles, customize your client portal with your branding, and keep everything organized from one central dashboard. With this level of organization and efficiency, meeting that January 31st deadline becomes much less stressful. And when it's late and you're tired, you need a helping hand, Tax Bandit's support team is actually there via phone call, email, or live chat whenever you need them. If you're ready to take control of tax season and join thousands of tax professionals who trust Tax Bandits, head over to accountingpodcast.promo/taxbandits. That is accountingpodcast.promo/TAXBANDITS. Thank you, Tax Bandits.
I've got one story to take us out. The AICPA is out with their 2024 CAS benchmark survey, and it's highlighting significant growth in client advisory services practices within accounting firms. Okay, not client advisory services, client accounting services, whatever. It's just outsourced accounting. Okay, anyway, I really dislike the way that the AICPA characterizes this, but I love this report. And it's
Do they put the two A's? Is it CAS?
No, they
double
finally
A?
got rid of that. That was really dumb. So now it's just CAS again. But now it's client advisory services, which is not what this is. It's not advisory. Most of these firms in this survey are just doing bookkeeping, accounting, closing the books.
Yes.
And maybe they do a little bit of advisory, but that's not the main thing. So I don't know why they call it that. But anyway, beside the point, this is one of my favorite things the AICPA does, and I think it's really valuable. So thank you, AICPA, for collecting this information. 17% year-over-year growth. These practices doing outsourced accounting experienced 17% increase over the previous year, and they are anticipating 15% growth in the current year with, get this, almost 100% projected median growth over the next 3 years. That means that these firms expect that they will double in 3 years. And they're doing it while making more money per employee, which means hopefully working employees less. So the net fees per professional in these practices rose 29%. Reaching $156,000. About half of these practices are investing in technology, and the firms that invest in technology report higher CAS revenue and serve 50% more clients. 50% more clients. That makes a lot of sense when you're increasing your productivity, and that is how you increase your fees per professional. So that was from over 200 U.S. firms that participated, so that's a pretty good sampling. And CPA.com is going to do a free webinar on January 30th at 1 p.m. Eastern to delve into the survey results and insights.
And I think these gains are on previous years. The CAS practices have been the most profitable and fastest growing. So this is really a nice stack for almost a decade.
Anywhere from 10 to 20% growth annually on average for year after year after year. And you do that year after year, you're going to double every few years. So it's great to see that this is happening because I really believe that these practices are the best. They're really the best, that the high point of accounting in terms of like the ability to have work-life balance, year-round work, all that stuff. So,
And cloud's really, I think, helped a lot of that, because prior to cloud, you always had to go to client sites. This wasn't a very profitable thing to do. But with cloud, now you can take on clients anywhere. You can partake's not the word, collaborate, right? Because you both have access to the data in the accounting system. You can be on top of it anytime you want. It really just changed the financial paradigm of taking on clients like this. And I think early on, Intuit even had data where firms that had cloud accounting clients or accounting cloud clients were more profitable than ones with desktop. Intuit and Xero both had data on this early on. So this is great.
David, great chatting with you as always. I've got to go jump to another webinar. Thanks to our live stream viewers. If you want to join us live, find us on YouTube. We are at the Accounting Podcast on YouTube. Subscribe, hit that notification button, and you'll get notified when we go live. And earn free CPE for watching this or listening to this today. Go to earmark.app and find the Accounting Podcast channel. Get your free CPE credit. It's free to sign up and free to use for 1 CPE per week. And if you want to support our work, please do subscribe for the low price of $150 per year. And you'll get unlimited. See you around, everyone.